This is going to be a packed video. Niche.com reports the top 10 best places to live in San Diego. In this report, you'll find a breakdown of the micro details for each area that are used to rank them. I'll share with you what areas ranked in the top 10 in San Diego County and do a deep dive as to what it was that made each of these areas rank so high. California Senate passes a bill that allows assistance of up to $150,000 for first-time buyers to purchase a home. The caveat: these funds are now accessible to illegal immigrants. As you can probably imagine, this is heating up a large number of California residents. Stick around, we'll dive into this more shortly. Next, this is one more thing homeowners do not want to hear. Insurance company Allstate is proved to raise their costs 34% due to the rising cost of repairs and increased severe weather conditions, i.e. wildfires. And Allstate isn't the only one raising their costs either. I'll cover what to expect in the upcoming rate hikes on the homeowners insurance, who else you can expect them from, and some additional resources to help you get through this. Lastly, the final piece of data we needed on inflation to lock in the chances of an interest rate cut in September finally landed. The PCE, Personal Consumption Expenditures Index, reported this last week, and nothing but great news. I'll fill you in on what is happening with the rate of inflation and how it will impact the real estate market shortly ahead. All this covered in this week's San Diego Market Matters. I'm Karl Kyler, your San Diego Realtor. If it's the case that you find value in these weekly videos, the best way for you to show your support is to click the thumbs up icon and subscribe to the channel. And if you're brand new to my videos and don't know yet if you like them, then stick around, and at the end I'll remind you about that thumbs up and the subscribe button if I've won you over. And if you're thinking of selling or buying here in San Diego, let's connect to discuss your goals and how I can help you achieve them. There's a link in the description below. You can click on to schedule a Zoom session, or you are absolutely welcome to call me directly. That's how most people do it. Now, on to the good stuff. Niche.com reports on the top 10 best places to live in San Diego County. These were determined based on factors such as public school ratings, housing, crime and safety, nightlife, diversity, suitability of your families, weather, the cost of living, along with a few others. In total, there are 12 values that are graded to determine an area's ranking. These factors are graded like students are, with an A to F grading designation. If you go to their website, you'll actually find that Niche.com ranked places all the way up to number 56. Everything after that then had a B- rating, but it's not identified as a number ranking. Now, this list is identified best places to live in San Diego. There are other best of lists, which I'll reference when combing through some of these areas that I'll share with you. So let's jump into the top 10, and feel free to click on their link in the bio if you want to take a look at the rankings yourself. You can check out what your area ranked as. But for the sake of brevity, here are rankings 6 through 10. Coming in at number 10 is Rancho Penasquitos, also known as PQ. Number 9 is Torrey Pines. No surprise to see them in the top 10. Number 8 is Carmel Mountain Ranch. Number 7 is Sabre Springs, right next to Poway, or Poway as it was originally pronounced. And number 6 is Encinitas. And I'm surprised Encinitas, of all places in San Diego, didn't make it into the top 5. Now for the top 5, and we'll go a little more in detail on these so you can see what got them to rank as they did. At number 5, Del Mar. No surprise to see in the top 5. Del Mar also ranked number 3 in best public schools in California and number 4 in best places to retire in California. Del Mar is probably one of my favorite places in San Diego. The only thing I'm not a fan of is the freaking traffic on the freeway at the Del Mar racetrack, but it's a small price to pay. Del Mar comes in at a close 50-50 owners to renters ratio, with a median house price at $2 million and a median rent just under $3,000. This is heavily influenced by attached units. Renters will easily pay $6,000 to $10,000 a month to live in a detached home in the area. Del Mar received A+ ratings in the categories of public school, good for families, weather and health, and fitness, but only received a C+ in diversity. How very interesting. Number 4 is Coronado. It's also ranked number 1 for my wife and I for having the best dog beach. Coronado, like Del Mar, comes in with a close 50-50 renter to owner ratio, with a slightly lower median home price, just under 1.9 mil, but slightly higher rent, coming in just over $3,000. Unlike Del Mar, Coronado doesn't have any additional rankings on Niche.com that are worthwhile, and it should be noted, Getting to and from Coronado is a real pain in the ass. Either you have to go over the bridge, which during high traffic times really sucks. And if it's the case that they have to shut the bridge down, then the only way to get into Coronado is going from the south. You have to drive all the freaking way down to Imperial Beach and then make your way up north to hit Coronado. Coronado has lots of A ratings throughout the categories. What I really don't get is how it got an A for commute though. And unlike Del Mar, Coronado got an A- in diversity. Number 3 is a surprise to me. University City with its designated zip code of 92122. Most of this area is located east of the 5 freeway. The funny thing about University City, aka Uni City, residents will sometimes identify this area as part of La Jolla, but residents of La Jolla, zip code 92073, will not identify Uni City as part of La Jolla. University City, host to UCSD, has some additional noteworthy rankings. Came in number 2 in best neighborhoods to live in San Diego, number 9 for most diverse neighborhoods in San Diego, and number 11 in best neighborhoods for young professionals in San Diego. One of the great things about University City is its location and accessibility. It's easily accessible from the 56 freeway and the 5 freeway. It's also in close proximity to a lot of biotech companies, tech companies, and engineering firms, all of which offer high-paying job opportunities. Unlike what we've seen so far with Del Mar and Coronado, the majority of University City is renters, and this is no surprise as host to the UCSD campus. And coming in at number 2 for the best places to live in San Diego is the highly sought-after Carmel Valley. With many, many schools identified for their high rankings, it makes sense that this area would draw lots of families wanting the best education for their children. Carmel Valley is the exact opposite of University City when it comes to renter to owner ratio. Carmel Valley's majority of residents are owners, with only a third being renters. This contributes to a more well-maintained area as a result of pride of ownership. Carmel Valley is also ranked number 1 in best neighborhoods to live in San Diego, and number 1 in best neighborhoods to raise a family. Some additional details that are interesting: 46% of residents are families with children, and 80% of Carmel Valley adult residents have a bachelor's degree or higher education. Carmel Valley was awarded lots of A ratings throughout all the categories used to rate each area. Oddly, crime and safety is not rated though. But when you look at the data that niche.com posts about this category, Carmel Valley is way, way, way below national levels in all aspects of crime in the area. And the number 1 best place to live in San Diego, at no surprise, Solana Beach, or sometimes we just say Solana, like the crypto coin. Solana Beach is a smaller area with almost 13,000 residents. It's smashed between the very, very chill Encinitas, ranked number 6, and the beautiful Del Mar, ranked number 5 of best places to live in San Diego. About half of Solana is on the west side of the 5 freeway, with the other half on the east side. Solana also ranks number 5 in best public schools in the state of California, and ranks number 9 in best suburbs to live in the state of California. Like Carmel Valley, the majority of Solana residents are homeowners. And again, this lends to the quality of the area. Many times, but not always, when you have a higher concentration of homeowners, you will find the area better maintained due to the pride of ownership. Solana, like Carmel Valley, also has a high number of adult residents with a bachelor's degree or higher, 70% based on the data here, and a B+ rating for its ethnic and economic diversity. Good for you, Solana Beach. And that's it for your top 10 best places to live via niche.com. Now, which of the top 10 is your favorite area in San Diego, and how accurate do you feel this list is? Be sure to leave a comment below and let me know your thoughts. Now, let's cover the recent bill that supports first-time buyers to become homeowners. Lots of California residents, ex-residents, and politicians are extremely unhappy with the recent passing of Bill AB 1840, which will require California Housing Finance Authority's Home Purchase Assistance Program, also known as California Dream for All program, to include applications of undocumented immigrants. The original program is structured to help buyers by providing a 20% down payment loan not to exceed $150,000 for the purchase of the home. This 20% loan has no interest rate and has no recurring monthly payment during the life of the loan. Loans like this are known as silent seconds. The trade-off is that at the point of sale or refinance of the loan, the owner is required to pay back the 20% loan plus 20% of the equity in the home. This is referred to as a shared appreciation program. Now, you probably saw this advertised all over social media as the Dreams for All program. The first time they ran it in 2023, it was a bit of a fiasco. It was new and logistically not dialed in yet. They relaunched it again in 2024 in June with some adjustments to address the logistical issues. The second round, they awarded 1,700 first-time buyers. With the passing of Bill AB 1840, there will be even more competition for the program. Undocumented immigrants with a social security number who are working and paying taxes are now qualified to apply and be awarded for the program. Joe Patterson, GOP Assembly member, in regards to the passing of AB 40 stated, "I just can't get behind using our limited dollars for people who are in this country undocumented." Something to keep in mind. Those that apply and are awarded the assistance for the Dream for All's program have to qualify for it. So they need a valid social security number, legitimate jobs, must be paying taxes, and have a qualifying level of income. I can definitely understand the concern people are having, but I think this is more about principle than opportunity. I'd be very curious as to how many undocumented immigrants would be able to qualify for the program. In addition, of those that do qualify, how many would be selected from the lotto for the financial assistance award? This isn't a freaking political channel, so we aren't going to dive into personal politics and values. This channel is about real estate, specifically San Diego real estate. Do what you want with the info, but bottom line, take this. By this bill being passed, it sounds like they're gonna offer the program again. So instead of complaining about how undocumented immigrants have access to the program, get your stuff together so that the next time the program launches, you're dialed in to apply. Now, we don't have an estimated launch date for the next time this program drops, but don't worry. I'm sure you'll see lots of people posting about it online, and I'll be sure to update you here as well as soon as some details are dropped. Now, let's jump into the next topic affecting homeowners and current buyers. On top of affordability, homeowners insurance is becoming a regular pain in the ass, not only for buyers, but also for current homeowners. With severe weather conditions continuing to increase in frequency and costs rising, insurance companies are in a bind. Either they need to stop offering coverage in the state of California to minimize their risk vulnerability, or they have to increase their costs to manage the rising risk. Insurance company Allstate is set to raise rates 34.1% on average starting this November. This rate hike will impact 350,000 current policyholders all over the state. And Allstate isn't the only insurance company planning to raise rates. Insurance company State Farm also submitted to raise their rates again. This time it's proposed that their rates will rise 30% for homeowners, 36% for condo owners, and 52% for renters. This is already after raising rates 20% earlier this year and not renewing 72,000 policies back in March. Nothing but doomsday in the insurance world for us here in San Diego and in the state of California. Here's what you need to take away from this. If you are a buyer, be sure to refer to your realtor ASAP for an insurance broker or company referral upon your offer being accepted. Listing agents, me being one of them, to protect our sellers are requiring that buyers find and lock in an insurance policy early on in the contingency period. I used to write that it was required within the first 10 days, but now I'm requiring it in the first 7. This provides my seller with an exit strategy from the agreement with a buyer that may not be able to close. A possible resource for homeowners insurance is the current policy the seller is carrying, especially if there have already been claims filed against the property. Asking the listing agent for the seller's current carrier is an easy request and option for every buyer. Now, it's not 100% guaranteed, but it's a great place to start. If you're a homeowner that gets a notice that your carrier is canceling your policy or raising your rates, contact me ASAP and fill me in on the details. I have a few really great insurance resources many of my clients have used and been happy with. Once I hear the details of your situation, I'll be able to see who you may be best placed with for a solution. And lastly, there is some clickbait crap going around that says the rise in homeowners insurance rates is going to cause a flood of homes to come to market for sale or a ton of homes to go in foreclosure. Now, let's consider reality here for just a second. For anyone who has owned a home for 4 years or longer here in San Diego, the cost to rent after they sell their home would likely be higher than the cost to pay the adjusted homeowner's insurance policy. In most cases, this isn't a cost issue. It's a budget problem for an owner if they're unable to pay it. Secondly, if you are a homeowner in true dire straits and unable to pay the rising costs of homeowners insurance, your lender has programs for loan modifications to help bring the monthly payment down to an amount that is more affordable for you. Lenders do not want to foreclose on homes. It's extremely expensive for them. Instead, they would rather offer modification terms that allows you, the homeowner, to stay in the home for the long term with a more manageable payment. All right, let's wrap this week's video up with the last topic and probably the most exciting. The Personal Consumption Expenditures Index, aka the PCE, for the month of July dropped this week and reports nothing but good news. The PCE is the metric the feds use to measure inflation and determine if it's actually on track to the mandated 2% by Congress. The forecast was for a 2.5% value, and that is exactly what came in. Along with the updated jobs report in last week's SD Market Matters and the Fed announcements that the time has come to start dropping rates at a recent conference, this PCE report is the nail in the coffin that was needed to solidify the rate drop on September 18th. Right now, the market believes that there's a 70% chance the Fed funds rate will cut 1/4 of a point and a 30% chance it'll cut 1/2 a point. Here is why this is important. Affordability is the main hurdle buyers and sellers in the San Diego real estate market are dealing with at this moment. When the Fed funds rate drops, it's not likely you'll see mortgage rates drop right away, but it is likely you'll see rates for everything else start to creep down. As the cost of living across the board starts to ease up, future borrowers will start to see more financial feasibility ahead of them. Now, this will be a process and will not take place overnight. Ideally, we're expecting to take anywhere from 12 to 24 months before we see mortgage rates well into the 5% range if they get there. As time goes on, rates will come down and income will go up. The entire system will recalibrate. Here in San Diego, our demand for housing is still strong, even though our inventory has increased significantly this year. If you're in a position to buy, this fall and winter season may be a really good time for you to secure a home here in San Diego. Competition tends to fall off some along with unmotivated sellers. This gives you an opportunity to get into the market at a time with a bit less competition, and you'll be way ahead of the herd that will want to get into the market when rates settle to their new low either in 2025 or 2026. And that's a wrap for this week's very dense San Diego Market Matters video. If you found this information valuable, be sure to hit the like button and subscribe to the channel for the weekly updates on the San Diego real estate market. And if you're thinking of moving to San Diego, check out this video I created that every buyer should watch before moving to San Diego. As always, I'm Karl Kyler, your San Diego Realtor. I'll see you next video.